cost of living is a huge reason many people move abroad, and what taxes you pay on things like your income, your investments, and your pension play a massive role in that. This video is absolutely not tax or financial advice, nor is it a definitive list. But what it is a look at 8 countries that offer low or no tax for expats in 2026. Not everyone will qualify for the tax incentives in this video, so if you want specific information tailored to your personal situation, make sure you speak to a qualified tax or financial advisor. Disclaimers done. Let's start off with the expat capital of the world. And like and subscribe and all the usual stuff. The UAE, specifically Dubai and Abu Dhabi, offers no tax on personal income. So that's things like salary, dividends, personal rental income. And there's also no capital gains tax, no wealth tax, and no inheritance tax either. For someone earning a professional salary, this means your take-home pay is almost your entire gross income, minus only a modest 5% VAT on goods and services, which is one of the lowest rates in the world. Tax rates for businesses are also pretty attractive, with 0% interest on profits up to 375,000 dirhams, which is around 102,000 US dollars. Above that threshold, businesses pay just 9% corporate tax. The trade-off here is that the cost of living in prime districts can be exceptionally high. The Bahamas is just the epitome of what I imagine when I think of tax-free living. 0% personal income tax, 0% capital gains, 0% corporate income tax for most businesses, and 0% inheritance tax. And beautiful tropical beaches. Obviously, the government still has to pay for stuff, so instead of income taxes, it relies on consumption taxes, namely a standard 10% VAT on goods and services, along with import duties and property taxes. So some items like cars, electronics, and imported groceries can be more expensive. The Cayman Islands have a similar setup with 0% income tax, 0% capital gains, 0% corporate tax, 0% inheritance tax, and 0% property tax. The Cayman Islands don't even have VAT. So instead, you may be liable for work, permit fees, financial service fees, and import duties that typically range from 22 to 27%. Residency in the Cayman Islands requires a slightly more substantial investment. For example, a certificate of permanent residency may require a real estate investment of at least $2.4 million. Now, for digital nomads and remote workers, the Global Citizen Concierge Program offers a more accessible entry point without the massive property investment. Nestled in the Pyrenees Mountains between France and Spain, Andorra offers what Monaco can't: excellent tax benefits plus affordability. Your personal income up to £24,000 is tax-free. Anything between that and €40,000 is subject to just 5% tax. And after €40,000, the whole thing is capped at 10%. By comparison, in the UK, you'll be taxed 20% on personal income over just £12,571. Andorra also has the lowest VAT rate in the world, currently at just 4.5%. Oh, and there's also no wealth tax and no inheritance tax. Monaco offers 0% personal income tax for residents, with the notable exception of most French nationals who must still pay French income tax. Monaco also offers no capital gains tax, no wealth tax, and no property tax for individuals. One of the only significant taxes to really mention here is a standard VAT rate of 20%. The biggest barrier for entry with Monaco is just the cost of living. I had lunch there on a recent trip to France, and it set me back almost €200 for a salad. And even a small studio apartment can easily cost several million euros. If you are an individual entrepreneur, Georgia could really be worth looking at for its small business tax regime that charges just 1% tax on your gross income up to 500,000 Georgian lari, which is approximately 180,000 US dollars annually. And then it only charges 3% above that. And this is gross turnover with no deductions for expenses, but at just 1%, it can work out as a better rate overall. Beyond the 1% rate for small businesses, Georgia also operates a territorial tax system for foreign-sourced income. So if your business clients are international and your income comes from abroad, Georgia generally won't tax your foreign income at all. Georgia has really established itself as a hub for the tech and startup community. And the capital has this growing ecosystem of co-working spaces, international cafes, and fast internet. But you do still need to be realistic about what Georgia offers. This is an emerging economy. Infrastructure outside major cities might be a little basic, and the language barrier can be significant because Georgia uses its own unique alphabet and relatively few locals speak fluent English outside of the tourist and business sectors. With a digital nomad visa, you can work remotely in Costa Rica and you won't have to pay any local income tax on any foreign earned income. The digital nomad visa allows stays up to 1 year with the option to renew for a further year. And you need a minimum monthly income of $3,000 to qualify. Just be careful because you may still be liable to pay income tax in the country where you did earn that income. If you are a remote worker looking for a temporary hub for a year, maybe two, Costa Rica could definitely be one to consider. Next, we have Panama, which offers one of the clearest and most established territorial tax systems in the world. This basically means that Panama only taxes income that's earned within Panama. So if your clients are abroad or your employer is based outside of Panama, Panama is not going to tax you on that income. Again, you may still be liable to pay tax in the country where your income does originate from. For businesses, the corporate tax rate in Panama is 25%, but this also only applies to income earned within Panama. And VAT is just 7%, making Panama extremely attractive for remote workers or entrepreneurs building an overseas business. Argentina, New Zealand, and Australia also offer similar tax relief, but theirs are only temporary schemes for new residents. Argentina offers the longest stretch of 0% income tax on foreign income for up to 5 years for new residents, whereas with Panama, it's just the standard. The penultimate country I want to talk about is Greece, which offers decent tax incentives for 3 distinct groups: skilled new residents, foreign pensioners, and high net worth individuals. Starting with skilled new residents. Under certain programs, and if you meet the right criteria, expats who move their tax residence to Greece and start doing business in Greece can benefit from a 50% reduction in their taxable income for up to 7 years. Qualifying foreign retirees who relocate to Greece can benefit from a 7% flat tax rate on their pension income. Thanks to the tax agreements like the UK-Greece Double Taxation Agreement of 1954, eligible countries can move their pension over and not have to pay tax back home. That 7% rate is available for up to 15 years, which covers a significant portion of most people's retirement. For qualifying high net worth individuals, there is a €100,000 annual lump sum tax on foreign income for 15 years, regardless of how much you earn. So if you're earning millions from international investments, business interests, or passive income, this flat rate could see some enormous savings. To qualify, you must complete an investment of at least €500,000 in Greek real estate, businesses, or securities within 3 years. And to be honest, that's like pocket change if you're earning in the millions. Singapore has built its expat reputation on being business-friendly, efficient, and strategically tax competitive. Singapore imposes no capital gains tax whatsoever, so when you sell stocks, property, or other investments, you keep the full profit. Singapore does charge personal income tax, but it is progressively low. Even at the top bracket, you're looking at a maximum rate of 24%, which only applies to income above 1 million Singapore dollars, which is around $780,000. For most expats, you're looking at tax rates much lower than that, often in the single digits to low teens. Singapore also offers a range of tax exemptions and reliefs. Foreign professionals brought in under employment passes can sometimes benefit from favourable tax treatments, and the country has tax treaties with dozens of nations to prevent double taxation. Whether you're a retiree, a remote worker, or just so ready to see more of your hard-earned income in your payslip each month, it could be worth investigating one of these 8 low or no tax spots for expats. If you enjoyed this video, please give it a like below and subscribe to the channel, and check out the links to Expatica in the description below for more expat tax and lifestyle content. Drop a comment below and tell me which country interests you the most, or maybe if you're already living the low tax life somewhere stunning. Thanks so much for watching, and I will see you next time.